Hi, and welcome back to our edition of Technically Speaking. My name is Violeta Todorova, and I'm Senior Market Analyst at LegacyFX. The rebound from the January 2022 low has faded, and over the past 2 weeks, the S&P 500 has been trading in a correction mode as global equity indices have been pressured by the escalation of the Russia-Ukraine crisis. The conflict over Ukraine is continuously getting worse, with Russian President Vladimir Putin signing a decree that recognizes 2 breakaway regions of eastern Ukraine as independent states and deploying troops to maintain peace. The latest development fueled fears about a full-blown conflict, which heightened the risk-off attitude and keeps investors on edge. Equity and crypto markets were the hardest hit, with gold, oil, and the US dollar index gaining ground. The market is awaiting several economic releases from the US throughout the week, but the key focus remains the situation in Ukraine, which would inevitably determine the broader market risk sentiment and keep the volatility elevated. Would geopolitical risk give way to a bear market, and is the Fed tightening into an economic slowdown? With all that uncertainty building up over the past few months, global equity markets have been under severe selling pressure. The question is if market fears and expectations are already baked into the price, or equities have further downside from here. From a technical perspective, the daily chart on the S&P 500 shows a clear deterioration of the primary uptrend. After posting an all-time high of 4,807 points in January 2022, the S&P 500 has been trading in a correction mode with a lower high forming in February. The weekly and daily momentum conditions have deteriorated significantly, suggesting that the index is vulnerable to a further weakness in the coming months. A textbook head and shoulders pattern formed throughout August 2021 and February 2022, throwing bearish cast on the chart. The pattern would be confirmed only if key support of 4,213 is broken. Upon confirmation, the first potential medium-term downside target is 4,020 points. In the short term, the index could rebound to 4,390 points, but as long as resistance of 4,484 holds, the market remains in a vulnerable position. Thank you for tuning in, and see you next time.